Let's talk about those energy markets and why we need to keep an eye on it from an agricultural perspective.
Well, Susan, thanks for having me on again today. There's something going on with crude oil, the products. We've seen a pretty big move here over the last few days after option expiration. And, I know we're ramping things up in the Middle East, but I think it's more than that. I think there's some other things going on here, whether it's been cost of production was higher than what people could get for new exploration or to bring wells into production. I don't know, but there wasn't enough expansion. There's enough usage, and we've just found a bottom there in that 55, 60 area. And so I'm looking up across the board in energies, and that means higher costs for some of the inputs the farmers need, like diesel fuel or maybe natty gas for drying this fall coming up here in 6 or 7 months. And so a guy needs to probably look at that. Should I be buying some inputs? Should I be locking in something? Because I think crude, could be triple digits here by the end of summer.
So you look at that and the movement of this energy complex. Will we see it possibly becoming a helpful factor on the grain side?
Well, you would sure think so. I know ethanol prices typically sag this time of year, and they've been pretty cheap. But hey, crude oil going up is going to bring the renewable side back in. We know bean oil has been doing real well. It's kind of been leading the bean complex higher. So I don't know how energy wouldn't be anything other than supportive for really all our markets. And so I'm not sure that you can, be a seller down here. You have to wait for higher prices, and we've seen the beans move, and now we're just starting to see the wheat move. But today has been a dismal day for corn. It's still down 1.5 on the day.